The United States is 36,882,952,000,000 in debt. 23,527,355 millionaires in the United States. There are 711,543 homeless people. There's 37,443,322 people living in poverty. US bankruptcies is 515,477. Defense and war is $901 billion. Social Security debt is $1,512,413,000,000, with the US population at 341,760,763 people. And out of all those people, how many do you think know that there is an alternative to preserve your wealth into something that holds its value while their hard-earned money is burning away in their bank account? Because it's less than 1%. But you, my friend, are in that percentage.
Connection established.
Welcome back, and thank you for tuning into your daily silver video. If you want updated on a daily basis of what's happening around the world and how that affects the price of precious metals, then make sure you click subscribe. I think we'll be doing a giveaway pretty soon. It's been quite a while since we did one. I think the last one was when we hit 100,000 subscribers. So yeah, stay tuned and may the luckiest stacker win. The introduction was going off of a site called usdebtclock.org. It shows tons of different statistics and numbers on what's happening. It's actually it's a very interesting and informational website. There's so many different, just very unusual statistics you would never think of, like how many millionaires there are in the United States. And there's actually a section about precious metals as well. It goes over each country, how much gold and silver they have, production of change. It's very interesting. But I wanted to show that to give some context on this article, or for this article. Now, this is from the Silver Academy, posted last week. As predicted, USA is a gnat's eyelash away from defaulting. Now, what would that do to precious metals if we did default? Now, what would the world look like if we did default? I mean, it's a very dangerous situation since the US dollar is the world's reserve currency. Obviously, markets would go haywire, and the economy would just it would be something that we cannot predict or speculate. Of course, there's going to be people that will try to give their ideas, but we have no idea. We've never been in a situation that severe or extreme. Things would definitely be interesting, though. There is no way to fix this. We're trying to get ourselves out of debt by replacing it with more debt. That's like trying to pay off a credit card with another credit card, and it's caught up to us. And that's what they're saying right here. A national debt of $37 trillion in funded liabilities and $200 trillion in unfunded obligations can't outrun math. And that is the truth. So the United States has crossed a Rubicon of fiscal credibility. Moody's historic downgrade of America's credit rating from AAA to A1 isn't merely a technical adjustment. It's a flashing red siren about a debt crisis materializing beneath the surface of global markets. Now, with Treasury Secretary Scott Bessent openly discussing extending maturities and slashing coupons on foreign-held debt, Washington isn't just flirting with default, it's engineering a slow-motion financial coup against the world economy. The default playbook is in plain sight. The Treasury's proposal to unilaterally alter bond terms for foreign creditors isn't creative accounting. When Jeff Gundlach, Bob Moriarty, and John Little call this a veiled default, they're underscoring what markets already know. A nation with $37 trillion in funded liabilities and $200 trillion in unfunded obligations can't outrun math, forcing foreign bondholders into longer dated, lower yielding paper would shatter bedrock premise of U.S. debt. That's the world's safest asset. The immediate aftermath, a 30-year treasury yield spiking to 4.96%, capital flight from dollar-denominated assets, and a scramble for tangible stores of value like gold and silver. And that, of course, is, One of the many reasons on why precious metals is the alternative that not many people know about, like I mentioned in the introduction. Leverage meets systemic fragility. And by the way, send this video, even if your friends or family, whoever, doesn't stack precious metals, just send them that video or this video just for the intro, so they see all of those numbers and it puts in perspective, because people like numbers, people like seeing valid proof, and the introduction definitely gives proof of where we're headed, right? They probably won't watch the rest of the video, but at least the introduction itself might plant the seed. So leverage meets systemic fragility. Moody's warns that the US debt will balloon to 134% of GDP by 2035. But this misses the real danger, derivative markets. In 2008, the notion value of over-the-counter derivatives stood at 592 trillion. Today, the figure exceeds 1.2 quadrillion. US treasuries underpin this edifice as collateral. A loss of confidence in their liquidity or credit quality could trigger margin calls exceeding the 2008 crisis by orders of magnitude. The Federal Reserve's balance sheet, already bloated at 9 trillion, would face impossible pressure to backstop both treasury markets and cascading derivatives failures. So anyone who's thinking that silver doesn't stand a chance because it's manipulated, or that it hasn't done anything in XYZ amount of years, wait for all of this to come into play. Wait until the inevitable happens with the dollar and what that would do to precious metals. You better hope your money is in things that hold its value, that have intrinsic value when all this comes crashing down. You better hope so, because most people won't. And imagine those people don't even know that there's a solution, that they could do this. But imagine knowing that you could put your money into precious metals and still not doing it, and then this happens. That would almost feel worse than the people that didn't even know, because you knew when you still chose not to. They don't even have a choice. And that's why I say planting the seed is so important. So political failure as accelerant. The downgrade reflects a bipartisan truth. Washington's fiscal recklessness has no ideological boundaries. Despite President Trump's pledge to balance the budget, deficits are widening through tariff-driven revenue schemes and Musk's Doge department layoffs. Moody's explicitly doubts any administration's ability to curb mandatory spending, and with good reason. April's 105,441 job cuts, the highest non-pandemic April in 5 years, reveal an economy already buckling under austerity's weight. And here's the coming currency crisis. When the world reserve currency issuer toys with default, the fallout transcends bond markets. The dollar's already shed 20% against major currencies this year, and Besant's trial balloon ensures further erosion. Historical parallels look to 1971's Nixon shock, but with magnitudes with greater consequences. A dollar collapse would ignite inflation in import-dependent sectors, crush emerging markets holding dollar reserves, and force a BRICS-led push for alternative reserve currencies. If you don't know what the BRICS nations are, it's Brazil, Russia, India, China, South Africa. There's many more now, but they're creating their own currency, and it's very, very interesting. I've dove very deep. Their currency is called the unit. It's backed by real gold. And with the Belt Road Initiative, they're taking over. It's basically it's G7 versus BRICS nations. Look into it. It's much deeper. But essentially, this is where there's a huge power shift happening right now. Now, with Trump back in office, of course, that's a little better. But right now, the U.S. dollar's up for grabs. Russia completely cut ties with the dollar. Many countries don't want anything to do with the dollar. They don't want America's greedy little fingers in their pockets anymore. And now other, places around the world are creating currencies so they don't have to. They're not reliant on the dollar. This isn't 2008 Redux. It's 1929 meets 1971 in derivatives laden, algorithmically driven financial system. The Moody's downgrade isn't the story. It's the first tremor before the quake. When the safest asset becomes a vector of default, no hedge fund, pension system, or central bank can claim immunity. The only question now is what breaks first, the treasury market's liquidity, the dollar's hegemony, or the political will to stop this train. The dollar's only as strong as people think it is. And if people start to think the dollar's not strong, it's not strong. And that's very, very, it's very, very scary for, someone who relies on, or I guess a world that relies on the dollar's strength. Now, you can go deeper into this website, usdebtclock.org. There's so many very interesting types of statistics on here. There's just so much, right? There's so many things like healthcare costs now, healthcare costs 2000. There's just so many very interesting things. Top 1% of wealth averages $19 million. U.S. drug deaths is 115,000. Disabled, U.S. retirees. There's so much. The stock market, real estate, obviously the precious metals part of it. There's just so many things that you could look at and kind of get an idea on the pulse of the United States and where we're headed. These numbers are never going to go green. They're going to continue to stay red. And that's a problem, especially when you look at the defense and war budget of $901 billion. I don't even think the human brain can fathom. I don't think the human brain can fathom how big of a number that is. How big of a number, or how big a trillion is compared to a billion. The brain cannot fathom that. So these numbers just aren't even comprehensible, which is very scary. Remember, our dollar's not backed by anything anymore. It's not. It's a promissory note. You have to put your money in something that holds its value, and gold and silver is the perfect thing. Anyways, folks, I'm going to wrap this video up here. Remember, share this video to someone who might not get it yet or needs the seed planted, because the introduction could definitely do that for them as they see the proof in the pudding and they see these numbers and show that there's a reason on why we're stacking silver. We're not just randomly doing this. It's because the dollar is deflating. It's lost 98% of its original purchasing power, and it's only getting worse. Anyways, thanks for tuning in. This was Silver Slayer. Make sure you subscribe. I will see you guys tomorrow. Peace.